Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God it's Monday. Tonight, we are taking a look at ticker VZ. You might know them better as Verizon. Verizon Communications Incorporated was founded in 1983 by Bell Atlantic, with the first office opening in Wilmington, Delaware. Now, they're publicly traded on the New York Stock Exchange and have a market value over $190 billion. Verizon is in the telecommunication services industry, in the communication services sector, and they are listed in the S&P 500 index. Some of Verizon Communications Incorporated competitors are AT&T, ticker T, T-Mobile, ticker TMUS, and Comcast, ticker CMCSA. We're going to review Verizon Communication Incorporated's earnings, their website, and visit the charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. It did come on the screen. Wait a second. Here we go. Here we go. We are streaming live on YouTube and Facebook. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, let's go ahead and get to it. Let's get to these earnings. We're going to make sure this smooth tonight. We're going to make sure this is smooth. We're going to make it show, make it show, make it show. It's not putting it on the screen. That's not it. Let's just go here. We ain't going to worry about it. We ain't going to worry about it. Platform. Let me see something, guys. Pause risk. Where is it? This is what I want up here. There we go. Got to manually do it. All right, let's cover Verizon. Verizon Communications Incorporated, ticker symbol VZ, the $196.8 billion company reported its first quarter earnings today. They have a 52-week high of $51.68, which took place on March 24th, which was, March 24th, and a 52-week low of $38.39 that occurred on October 23rd, which is a trading range of $13.29. And they closed today at $47.10. Verizon Communications Incorporated earnings report missed on the top line, reporting revenue of $34.4 billion, which was lower than the market expectations of $34.82 billion. But they beat on the bottom line as disciplined expense control and strong margin expansion offset revenue headwinds. EPS was higher than the analyst and market expectations of $1.21 when they reported an adjusted EPS of $1.28. Verizon Communication Incorporated reported a GAAP net income of $5.15 billion, which was higher than the $5 billion net income they reported this same quarter last year. This represents an increase of 3%. So for the first fiscal quarter of 2025, their net profit was approximately 2.9% lower than it is compared to now a year later. The earnings were released before the market opened, followed by an 8:30 a.m. Eastern time conference call. As far as guidance, management raised their 2026 adjusted EPS guidance to a 5% to 6% increase over 2025 and projected free cash flow of at least $21.5 billion. That 52-week high compared to today's closing price of $47.10 represents a decline of 8.9% over a span of approximately 1 month. So if someone invested $1,000 in March at that 52-week high, they would be seeing a loss of $88.62. All right, let's go here. Let's see if everything working smooth. Yes, it is. So let's talk about why we visit these company websites. We're looking at the visuals and the text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? To find those answers, we browse 4 key areas on their homepage, on their website. So for the homepage, we look for the goods and or services. About us for purpose, vision, and mission statements. Careers for employee benefits and opportunities. And investor relations for SEC filings and stock quotes. And for your convenience, all companies featured in tonight's live stream are down in the description. Now let's go back to Verizon Communications Incorporated's website. There we go. There we go. That not too bad. Let's see what we can do here. Nope, that wasn't the right one. I see what the problem is, so let me fix it. Give me 1 second instead of freaking out. Let me just talk to you and let you know what I'm doing. I'm taking the ticker off the screen. We got it. So we are over here on Verizon's website. My screen is all the way back. Let me get this going. Zoom in. So we already know what their goods and services are. They offer internet, cell phone service, cell phone mobile plans, things like that. So we're just going to browse over the website and see what they have. Close this here. Go to Cookie Monster. Just scroll. They have some deals and some sales going on right now. Thank you guys for joining the stream. Please hit that like button. Definitely would appreciate it. So yeah, we don't need to spend a lot of time trying to figure out what Verizon does. We know what they do. So we are going to go ahead and look at the about. So here it is right here, about us. So let me check while we're here. I don't see the investors relations over here, but I do see careers. Maybe we scroll down a little bit. Nope, I don't see it. So let's just move on. Let's go to about us. Maybe it'll show up over there, but I don't see it. Let's go there. All right. So we are looking for something just, oh, this is, they done took up the whole screen trying to make us click something. Close this. All right. Remember, the links for the websites are down in the description for your convenience. If you want to spend a little bit more time on something, I'm trying to browse through this. Work with purpose and find success. So they have the careers clickable link right there under, okay, here's the investor relations. So we found that. So that was hidden in the about us on their website. So we see that. Still looking for the vision and the mission statement and purpose and all of that. I'm thinking that was it up there, at least the purpose, but they didn't specifically say it. They just used the word purpose in it. Let me show you what I'm talking about. Right here. They just used it. So we're just going to go to the careers right from here, right from this link. They might have some more information about the job on here. So let's look up here. All right. Well, that wasn't hard to find. I found the benefits. So we'll look at benefits in a second. So let me zoom in. We're going to scroll down and see what they have on the page. We get you. All right. Opportunities. Choose path. I've seen a lot of different cool stuff if you were looking for employment on these websites when we browse at the different companies. I've seen some where they'll put a whole map of the world and they'll show where they're hiring, what the position is, how many people they need. Is very detailed. Like if you wanted to apply for a job before you relocated somewhere, it would be a very, very powerful tool. And they tell you, some companies tell you all of the steps you have to go through or the steps you have to go through to get hired with the company. So let's go to benefits. And here it is, right? So like right here, what I just said, how we hire. So if you went here, they say, let's break it down. So they should give you details about how they go about the process with hiring. Here go the steps right here. Step 1, 2, all of that. So that's what I was talking about. Spoke it right on up. So let's go over here to benefits. Benefits to be yourself. What do you give these people? What's the health? What's the life insurance? What you got? What you got going on? Okay, they got some stuff for school. So here's the amount, about $8,000 towards tuition, growing your family. This is another company, guys, with adoption assistance. I've seen one company where they, I think it was up to like $25,000 if you were interested in adopting a child. I had no idea that companies offer stuff like that. Then I seen one where companies offer you a reimbursement if you ride a bicycle, not a motorcycle, a bicycle to work. So here's a bunch of their benefits right here. Child care, elder care, evenings and weekends. Wow. Okay. Education assistance. So it looks like they take care of their employees very, very, very well, at least from what I'm seeing and the benefits that they offer. And they make it very clear if you can find it on the website. So we visited that. Now we need to find the investors relations because it was buried over here. It wasn't at the bottom of the page. Oh, here it is, right here at the top. So they have it up here too. So let's go to investors relations or investors. And now we are looking for the stock quote. I see it. I can't scroll down. It's right here above me, right here where it says stock information. Yes. And they pay dividends from what I'm seeing, but we're going to look at that on the charts as well. So let's go ahead and click stock information. Ooh, I'm definitely zoomed in, ain't I? All right. So right over here, they trade on the New York Stock Exchange. There's the ticker symbol and the closing price for today. And this was the price change. So scroll down. Here's the chart that they offer. Now, this is the first time I've seen a chart like this with this at the bottom, like these in particular colors and style. But this is the chart that they offer on their website. But we're going to go to the Thinkorswim offered by Charles Schwab in a moment. So they did do stock splits, and this is more information about, I don't know what these companies are. But yeah, they have other tools and things on the website. Let me see. Yeah. All right, let's go over here. We're done. Let's move on. The main. So before we look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited. Traders lose critical detail and advanced platform features on a mobile screen. So be advised, trading from a phone is usually the least effective way for managing assets. To see every detail, use a full trading platform and watch these streams on a computer or TV. Only use your phone as a last resort. Now let's look at the charts for ticker VZ for Verizon. Let's go over there and look and check it out. So Thinkorswim, we go here. Put the disclaimer back on the screen. There we go. All right. So we are looking at a 1 year daily chart for Verizon. And we're going to do a quick technical analysis on this. I am looking at something. I'm going to jump out to the 10-year weekly chart so I can get some more price levels. So this looks like a zone here and a zone here. Okay. This is going to be. Yep. I'm going to go ahead and put a zone here. I'm going to use a zone. Yeah, I'm going to just go ahead and do a zone. So here's what I'm seeing as a support and resistance zone. And I zoomed out and used the weekly chart instead of just focusing on what happened this year. So when we zoom back in, we would have used a longer historical time frame to look for these specific levels. And I know that zone looks kind of wide, but that's what I'm seeing. Sometimes they wide, sometimes you can get away with using a line. It's all in what you see. This is what I'm seeing from my perspective. As far as resistance, definitely I can use a line here. I can, but I'm gonna go ahead and use a zone. Use a zone, bring it over. So I see this area. as resistance. It didn't take. Wait a minute. Here's what I'm seeing as resistance. It did 2 of them. Oh man, my computer moving slow. Work with me, guys. Give me a second. Remove that drawing. Is this a line? Yeah, that was a line. So we'll remove that. That's what was throwing me off. Okay, so we're gonna go here. Start that as the top, bring it over here because I was looking at these wicks in 2022. So there it is. Now we're gonna go back to the 1 year daily chart. That's where we are now. So the 52-week low, that's this 38.39, and that was on October 23rd. We talked about that earlier. Just want to bring it up again so you can see where it is on the chart. And here's the March 24th 52-week high of $51.98 and $51.68. So today with the earnings, it looked like it popped up to the high and closed down here as far as like selling pressure kicked in and pushed this price back down. But it definitely didn't reach 50. So it looked like it went to this recent gap down area right here. So what day was that? April 7th. So the low of April 7th, that's where it looks like that wick. The high for today came back and tested and it failed. It came back down to this gap area. Since then, this gap has been closed by the trading activity right here. But that's what I'm seeing on the charts. So right now, the price is in between this support zone, and I would say $48.53 is going to be the resistance for right now. So that's my quick technical analysis on Verizon. Let me zoom in, and we are going to do the stock quote right now. So floating data box. All right. So Verizon opened today at $47.43. They had a high of $48.65. They had a low of $46.74, and they closed today at $47.10, which was a trading range of $1.91. And when we look at the trading volume, they traded 37 million shares of their stock today. It was actually 37.9. Could round that up to 38 million if you wanted to do that. Let's take the floating data box off. And we need to cut on my volume labels so we can talk about what happened with the volume. So we need to see what the average trading volume for Verizon is before we decide whether or not this was high or low volume. So something's going on, guys. Give me 1 second. Give me 1 second. I want this to just do this. There we go. I don't know why that wasn't working, but we got it. So right over here, when we go to the volume, we can see that the average trading volume for Verizon is 24 million shares in a trading session. So today was definitely above average, but that's expected because usually around earnings time, and today was earnings. So since they announced earnings today, companies, stocks usually have higher trading volumes on those days and around those days. And we can see on Friday, they also had volume that was higher than average. They had 26.6 million on Friday. So the volume increased, definitely had higher volume today. And both days, Friday and Monday, were above average. Now, when we look at the volume rank percentile, let's see if this works. That didn't work. I don't know what's going on with my stream deck, man. Volume rate percentile was 91.3%. So the days above were 22. So it was 22 days. Only 22 days out of the most recent 252 trading days had higher volume than today. So it was definitely a lot of trading going on with Verizon today. It was almost the most, as far as like 100%. If it was 100%, it would have been the most volume they had in the most recent 252 trading days. But they definitely had a lot of volume today. Okay, So let's move on. Let's go here. Let's go here. Okay, well, that worked. I'm definitely got to fix this when we get done. All right, back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe, and if you wish to send a monetary gift to support the content, that button didn't work either. Go right over here. Let me put it in. Finance risk. That's not it. There it is. And if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description as well as on the ticker on the screen. Now, let's look at the S&P 500 index to see what they did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company in the S&P 500 index. So let's go back to the charts. Okay, it worked that time. I don't know. I don't know what this thing is, so finicky. All right. So we go over here to the symbol box and we type in SPY. They made another high today. Man, the S&P 500 is wild. It is wild. And we just did the technical. We've been doing, well, we look at the SPY every time we do the live stream. But we just drew this area right here as support because the price on Friday had closed above it. We use these wicks. Let me zoom in some more. We used the wicks on these candles, like this candle here. So that was on the 17th of April. We used the top of this wick and the top of that wick. This wick peaked in it a little bit. Let me stretch this out, pull this down so you can get a better visual. So we were focused on this area right here to try to find where the support would be. And this is what we drew on the chart on Friday. I think it was before Friday because this was Friday when it closed above it. So Friday closed above the support resistance zone that we drew using this area over here. I can't remember how early we drew it, but it was definitely before today because we checking it now, right? So today it opened above that support zone. The wick came back and tested it. It dipped its toe, its pinky toe right there in that support. And it closed near the highs of that candle. So we're still making all-time highs on the S&P 500 index. The companies are pushing these prices higher and higher. We have companies worth trillions of dollars now. This is wild. All right, let's read the quote for this ETF. Let me put my floating data box up. You might think I skipped over something, so let me explain this. There's no historical data since these are all-time highs that are higher than this. So there isn't a way to use anything to try to determine where the resistance would be. There's no historical data with higher prices. That's why there's really no other technical analysis we can do. So I just want to explain that to you. So let's talk about the ETF quote for today. So the SPY opened at $713.17. They had a high of $715. Let me cut my chat back on. I can't see it. They had a high of $715.63 and they had a low of $712.30. And they closed today at $715.17, which was a trading range of $3.34. When we look at, oh my gosh. Now, because we look at this so often, I know that the average trading volume for the SPY is in the 70 millions. Yes, it's in the 70 millions. So this is extremely low. So even though it's hitting all-time highs, there's not a lot of trading happening up here at these price levels. It's not. They only had 33 million shares of this ETF traded today. And when we look over here at the average, which you can't see because I'm blocking it, that didn't work. So I got to see what's going on with this program, guys. But there we go. So take me off the screen right here. Take the floating data box off. The average volume is right here. 76 million is the average trading volume. And they did less than half of that. I mean, yeah, less than half. They only did the 33. So 33 twice would be 66. And it's even lower than it was on Friday. So on Friday, it was 45 million. And today it was even lower, reaching these highs on lower and lower volume. That would make me concerned. And then it was only 1 day. So now when we look with the, let me put me back on the screen. Is that going to work this time? Nope. So let me go ahead and click that. So when we look at the volume rank percentile, I haven't seen this low. Have I ever seen it this low? I've seen the highest volume, but I don't think I've seen like the lowest volume before. There was only 1 day out of the most recent 252 trading days that had lower volume than today. So this ETF is hitting all-time highs with very low interest of trading activity at these highs. That's crazy. So the volume rank percentile is 0.4%. Wow. All right, so that's my technical analysis on the SPY. So let's move on. Let's go here. Did that button work? Yeah, it worked. All right, now let's look at today's winners and losers. First, we're gonna look at the losers so we can end the night on a high note. And I'm gonna give you a little clue. I hope you ate. I hope you ate your dinner, you ain't hungry and all the other good stuff, because we about to be looking at some things that might make your mouth water. So let's go over here to Market Watch. I don't even think did we put the SPY on the screen? I don't even remember if we put the SPY ticker on the screen. I think I missed it, but let's go over here. So the biggest loser for today is ticker DPZ. You might know them better as Domino's, and you can't see it. I didn't even put it on the screen. Boy, I am slipping. Here we go. And that's not the ticker. So here we go. There we go. DPZ. Domino's Pizza right here. DPZ. So they lost 8.84% today. The closing price, the previous close was $367.83. And the close for today was $335.30. So something I was looking at, just gonna throw this in here, that I was looking at last week is that it looks like the companies that deal with fast food have been struggling as a whole right now. So that would be in the consumer discretionary industry. It seems like the consumer discretionary industry is hurting right now. And I'm gonna show you a tool that I have where I can like quickly look at this. So I'm gonna show you a little secret tool that I have. So I'm gonna go over here to the charts. I'm gonna pull this tool up. Let me pull this off the screen. I'm gonna take me off the screen. I mean my chart off, and I'm gonna pull it up. It's my top secret tool. So I'm gonna take that off the screen. This is the 5-day one. So no, we don't want to look at the 5-day. We go over here to 1 month. Consumer discretionary, that was 8.35. So go back. No, it's not really showing it like that. I'm gonna have to just show you the companies I was looking at. I'd rather do that because the tool is not showing it. So let me put the chart back on let's go back over to Market Watch, put it back on the screen. Put that back up, put this here. So it was a few companies I was looking at, like McDonald's. So McDonald's would be in that sector as well. So let me change this. We're gonna go over to Pro Market Close. So if I pull up McDonald's, MCD, see how McDonald's is going down over here? This is see how McDonald's fell? So I was looking at that like fast food restaurants seem to be struggling right now. And Domino's is the biggest loser today. McDonald's isn't the biggest loser, but they're going down. You can't see it. Let me take this button, ain't working. Oh my gosh. Take me off the screen. Their 52-week low is over here at the $283.47. And today I had been watching McDonald's around this time. You see when we went over here, this line was already here. We did not draw this tonight. So people don't, how can I say this? Some people think that technical analysis, you're just drawing lines on a chart. And at first I kind of thought that, but after watching the charts a lot, like after putting in the screen time and actually knowing how to draw the lines, you will actually see often that the price will come back to those lines if it's a historical level area. So if you was watching me before, or if you watched the streams before, et cetera, you've seen where we've already drawn these lines. And then later on, when we come back to the companies, the price will come right back down to these areas that we've drawn the chart before, just like now. I had traded McDonald's over here in my paper trading account, and I shorted it when it dropped below $300. I don't even know if you know what I'm talking about. If you do, you do, because I know everybody at different levels. But that's why this technical analysis is over here. And because they're in this consumer discretionary industry, and fast foods is in that industry, from my analysis, it seems like all of those companies are struggling right now. Like another one would be Chipotle. So it would be CPG. Is it? No, it's not. That's not the ticker symbol. CMG. I wish I know where to find it. Give me a second. We go over to Market Watch, and then we click symbol, and I'm gonna go down to C's, Chipotle. I'm thinking it's CM something. It was CMG, so it's CMG. So we go over here, CMG. Now they didn't go down as hard as McDonald's did, but they didn't do well today either, and they have earnings coming up. So they had a red day too. They're trading under the 200-day simple moving average, and they're trading below the 9-day simple moving average. And if I take me off, I'm gonna see if I can pull this over. I can't. So let me try this other tool. Go over here, time axis, change this to 30, and then the 52-week low should fit in the screen without me taking me off the screen. There you go. So the 52-week low for Chipotle is $29.75. So that's about $4 more than what it's trading for now. And it's downtrending because it's staying below this 200-day simple moving average. And all three of those companies are in the same sector. It just seems like the fast food industry is taking a hit right now. So I'm not surprised that Domino's is the biggest loser today. So I just wanted to share that with you. Like when we had seen Avis was going crazy, was shooting straight up. During that same time, Avis's car rental industry was going up. The ticker symbol Hertz, a car rental business, was also going up. It's like similar businesses do well and bad together if something's going on in that industry where they either benefit or it affects them in a negative way, whether it's positive or negative. All of those businesses feel it if it's specific to that industry. So let's pull up the calculator. If someone had invested $1,000 in Domino's at that previous close and lost at 0.0884%, they would have lost $88.40. Then we negate that, make it negative, and add the $1,000 investment back to it, and it'll tell you how much money that person would have left. And they would have $911.60. The $1,000 that I used as an example, guys, all you have to do is change that to hypothetically whatever someone would invest. $20, $30, $40, or whatever, and the other numbers would stay the same, or you could switch them out to where the person purchased that and where the stock is now, or where the investment is now. You just switch the numbers out, which I'm going to go into more detail in a different video, because I did do research to find out what companies could you buy fractional shares of, because some people are intimidated by certain stocks being a certain price. Like when we looked at McDonald's was trading for like $290 a share. Is that what it was? Let's go back. Let's pull it up. Even Domino's. So Domino's is trading for $328 a share. Somebody be like, man, that's too expensive. You can buy fractions of that. Someone can buy fractions, which means just a piece of one share instead of purchasing the full share. But we're going to come back to the charts in a minute. We did the math on a hypothetical loss. Now let's go over to analyze. We're going to look at their website, and then we're going to go back to the charts because I wanted to give you some other information tonight. So ticker DPZ, they are in the consumer discretionary sector. Matter of fact, we got time. I feel like chatting and getting this together. So let's go over here. want to show you something else. So you can narrow this down and look at the other companies in the S&P 500 in the consumer discretionary sector. We can use this visualize tool to see if they were doing bad, so we can see what I was saying. So we go over to Market Watch and we go over to visualize. Now this is going to be a heat map. They call this a heat map. So we go to the S&P 500. This is a heat map. So what this is basically doing is showing us all of the S&P 500 companies in different sections. Let me take me off the screen so you can see this. This is all of the different sectors. This information technology, this is communications, this consumer discretionary, industrials. So what we're going to do, we need to narrow this down to consumer discretionary. That's where we want to look at, right? So what we do, we hit this drop down on the S&P 500 and we go down to consumer discretionary. So notice how most of these companies are red. Tesla's green, Ford is green. I don't know what LVS is. MGM, Lulu, Nike, TJ, is that TJ Maxx? I'm not sure. Let me take Domino's off the screen real quick. And you got eBay down here, it's real small. But then when we drop that down, we can narrow it down even further. So we want to look at the section restaurants right here, hotels, restaurants, and leisure. So McDonald's, you see it, hotels, restaurants, and leisure. We click that industry inside that sector. You see how most of everything was red, like I was saying? Here's Burger King, McDonald's. Where's Domino's? Here's Domino's. Here's Chipotle, DoorDash, Norwegian Cruise Line. The only ones that's green in this industry are casinos. All the restaurants are red. And that's something I had noticed last week, but I didn't mention it. So Domino's Pizzas, we are in the company profile section right here. Domino's Pizza Incorporated, official name of the business. Here's their website. They have two websites, guys. This is the one for investors, and then they have another one where for people to be able to order food. So we're going to look at both of those websites, and I'm about to read some of the description now. So the description: Domino's Pizza Incorporated operates as a pizza company worldwide. The company operates through three segments: U.S. stores, international franchise, and supply chain. It offers pizza under the Domino's brand name through company-owned and franchise stores. That's as much as I'm reading. Put me back on the screen and let's move on, go to their website. I'm ready to look at their website. Put this ticker back on the screen. Forgot to do that. Well, I got to practice. I had a busy weekend, did that wonderful interview, and it was like right after that I went, boop. My mind was like, all right, we done. But now that the new week is ready, I ain't ready, but I showed up. That's what I did. I'm here. Let's zoom in. All right, we had 150%. This is why I said I hope you ate, because we about to be looking at a lot of food for a minute. So we know what Domino's do. We know what their goods and services are, right? Sell pizza. Me personally, I don't care for their pizza too much. I used to. It's like over time, I'm in my 40s. So like over time, it seems like some of these companies, the quality of the ingredients has like diminished over time. I don't know if it's just me, but like some companies, it just seemed like, and I haven't had them in a while, but the last time I was actually going to Domino's because I really liked it, they subs was banging. The subs, the oven baked sandwiches, delicious. They got a chicken bacon ranch or whatever. I was killing that boy. Because it was a business I was doing business with that was next door to Domino's. I love going up there. I'm like, I'm going to Domino's as soon as I leave here. But I just cared for their oven-baked sandwiches more than anything else. So, yes. So that's Domino's. We know what they do. So now we're looking at the bottom, and what I'm browsing for, I'm looking for the Our Company information. So they do talk about the nutrition and things like that, if that interests you. And all these little symbols right here tells us that it's going to take us to a whole nother website when we click those, which I don't like. But we have the About Domino's. Here's where the careers, right here where it says jobs. I don't see anything about investors relations right here, but I already have that website ready to go. And I'm going to be shocked if it's going to just be this corporate or about Domino's, but let's just see what happens. Yes, that's it. That was the other website I had ready right there. And did it open up in a different window? Yes, it opened up in a different window. All it did was launch the other window I already had ready. So let me click this. So this is all about, I hate when they give all us cookies, reject all. Okay. About pizza, so I'm trying to find the vision, the mission, and the purpose statement, guys. That's what I'm doing. That's what I'm browsing around for. And I don't see it. The links for these websites are down in the description for your convenience. If you want to look over this stuff on your own time, if I'm going too fast, if you've seen something that interested you and things like that. So now I got a whole bunch of this stuff open at the bottom that I can't see. Nope, just made it worse by full screening it. Here we are. We got all these links down here at the bottom. All right, so here's the corporate one. Here it is, about us. So we found about us, Domino stories. Let me zoom in a little bit. That didn't do anything. Control, plus. There we go. So we zoomed in, help you see better. About us. As the largest pizza company in the world, I had no idea Domino's was the largest pizza company in the world. No idea. Wow, okay. See our menu. No. Oh, here's the investors information up here. Yeah, this is a good site right here. Here it is. There we go. Our purpose and values. They made it easy. We had to get off that food. They're like, nah, just buy our pizza. Buy the dessert, buy the pizza. You want to invest? You got to go somewhere else. Next. So that's how they did it. So we found it. Here's the purpose. Oh, I love it when it's easy like this. I hate when they hide it, but we found it. Here it is. Our purpose and values make it real clear. I ain't seen the Domino's look this nice. Not saying they look bad. I just never seen a picture of I've never seen the Domino's in person that look like this picture we looking at. No knock to the company, but I haven't seen it. So here's the purpose and values. They talk about the history, the innovations, the giving back. Okay. They got a bunch of stuff right here. Okay. So do the right thing. I wonder if they, was that anything that they took like of an idea from Spike Lee would Do the Right Thing, the movie? Because what was his name? Radio Raheem and the pizza joint in the neighborhood. So they did MORE as an acronym. Most delicious food, operational excellence, renowned value. Okay, being creative. All right, so we seen that. Now let's go ahead and look at join our team. Let's see if we can find some benefits. Now, you know what they did, guys? They popped this up on a whole nother window. So let me bring this over here so you can see it. Blow this up. There we go. Now, full screen, zoom in. There we go. All right. Now, grow and win together. Snacks, cookies, all of that. Career area, search jobs, stores, supply chain, corporate. So they talk about us over here too. So about us, since 1963, we've grown from just one store to become the #1 pizza company in the world. I'm serious. I didn't know. I know it. And I love pizza, guys. That's why I feel so stupid. I love pizza. I had no idea Domino's was the largest pizza company in the world. No idea. I remember that little creepy logo, man, they had. I don't know if they still got it, but I remember that. So they got educational assistance, employee stories. I just wouldn't believe it. That's just me. I'm like, who would say anything bad about the company and expect to keep their job? Or that they was gonna post it on the website. I don't know. I just don't buy it. So this is a nice little summary right here. Paid time off, mental health, and family support. So this is where they talk about some of the benefits. Wait a minute. It says only the eligible corporate team members. So there's something that you have to qualify for or be in order for these things to be a benefit that you'll get. Okay, got to read the fine print here. All right. So we see that. And what then blew my mind is that they're the largest pizza company in the world. That stands out to me so far right now. Now, development programs, no. I'm ready to go to the investors relations. So I believe we can leave this and we can go right here, investors. So go to overview. They did it again. They opened it up on a different here it is. Bring it over, blow it up. There we go. This, zoom in. Bam, bam, bam. All right, we got it. We got it. Bring you back over here. We got the chat. Yes, we do. Blow that up. Okay. Now, purpose. They talk about the purpose and values again. So here's the stock information right here. Here's the stock price. They lost $32.53 per share today. Wow. Okay. So here's the events. Blah, 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 blah. News. Scroll down. All right. So we can go right over here to stock information. Can we click this? Learn more. So I'm sure we can click learn more to go to the same place, but I'm gonna go right up here where it says stock information. And usually when you go up here, it'll actually tell you specifically what you're looking for. So we want stock quote and chart, or that's what I want. So we can pull it up. So here's the stock quote information they offer on the website. Now remember, this website is their corporate website, and the links for both websites are down in the description for your convenience. The Domino's Pizza website, for if you want to order something, and then the business website if you want to work for them or if you want to invest. So that's that one. Here's the stock chart that they offer, historical lookup, some other tools. Let's see. All right, we good. Let's go over to Thinkorswim. I'm ready to go to Thinkorswim. Let's pull them up on the charts. Now we do this. Let's put this back where it need to be. So we do have the disclaimer up. We got Domino's Pizza ticker on the screen. Let's go to the charts. Whew. All right, man. They was trading for $500 a share. I'm rounding it off right here. So you can't see the date. Let me put the floating data box on so we can talk about the date. Right now, we're about to talk about the 52-week high and the 52-week low. So I'm gonna zoom in over here. At the top of that floating data box, it tells us what day that was. So it was May 19th, 2025. Domino stock had reached a high, that 52-week high of $499.08. That was that. And then since then, today, they hit a 52-week low of $328. No, yeah, $328.74. Let me take this floating data box off. I'm going to open up a tool and use this tool so we can see what percentage loss this is from this high to that low. So it's this trend line tool. So what we're going to do, we're going to connect it to the top of that May 19th candle. I believe that was the date. Oh, it's putting it at the top. Let's try this a different way. Let's start off at the bottom and see if they put yeah, there we go. So they're putting the information at the bottom. Did they flip it? I hate when they do that. All right, so this is what I was trying to do. I was trying to make it where we could see it down at the bottom, but they putting it over here on the left. They put this on the left. I wonder if I could change this in the settings. Let me see. With color, style, extension, arrow type on hover, show label on hover, always, never. Label position on the left. That's it right there. Okay, so we can change this right here. You saw how I had to move the whole chart to be able to see that floating box. So we can change it where we can put it in the middle or we can put it on the right. I want to put it on the right because it's going to be easier for me to keep an eye on it. So let's see if that fixed it. Yes, it did. All right, let me double click. Boy, oh boy, oh boy, that's wonderful. So now it's over here to the right. This is going to help me tremendously. Yeah, just open up the tools. It ain't going to blow up. Just open it in there and change it. So now let me zoom in and we're going to see what this percentage change was. So from that 52-week high to this 52-week low, they lost 34.13% in a little under a year. So it says 343 days. They lost $170.34 from that 52-week high to that 52-week low, which was a 34.13% loss. That's crazy. And I'm glad that I figured this thing out. And I think it'd probably even be better to put it in the middle. No, we're going to leave it for here. We're going to leave it there for right now. So that's the trend line tool where you can do that, guys. That's what that is that we were looking at. And my volume label is not here again. Now, if we did some technical analysis, let's go here and do the quick technicals. It gapped down from Friday. So Friday's closing price is going to be the low of this candle right here. So that was April 24th. So we're going to snap this to the bottom, which would be the low of Friday. So that was $366.89. And then the high of today is going to be the top of that candle. So it was $344.01. So they lost, I'm rounding it off, $22 from Friday to Monday between the lows and the highs. So this was a gap down, and today they had earnings. Now, when we look at the earnings difference, they do pay dividends. So the last time they paid dividends, they paid $1.99 per share. Now, I want to look at something and point something out to you guys. I want you to see something. Oh, they only showing us a few, and I'm blocking it. 408. You see let's just show you. You see these earnings right here? I know it's probably very small, but it says $4.08. So the EPS October 14, 2025 was actually lower than what the EPS is now. And even though it was lower than what it is now, it was trading up here. It was trading at $420 something when the EPS was lower than what it is now. So if you were using the EPS to try to value the company, it's worth more now based off the EPS, and the stock price is lower. So I showed you the industry itself, the sector itself is struggling. The sectors itself is not one individual company that's struggling right now. It's restaurants across the board in the S&P 500, specifically, which one I'm referring to when we looked at the heat map, when we looked at the visualize tool. So let's go back to the technicals. So since this is at the lows, we're looking for resistance. So I'm going to say the resistance is, from what I'm seeing, the lows right here is going to be the resistance. So if I was to draw a zone, you know what? Let's go to the 10-year weekly chart. Let's go back and find some more price levels so we can see what's going on here. So if we look at this area right here seems to be why it stopped, like right there. And I'm going to show you what I mean once I get this going. So if I bring this over, you'll see what I'm saying. These lows right here, let me zoom in. These lows right here came to that zone in 2023. And that's where this is coming at now, like right near these lows right here during this pullback. That's what I'm looking at. And remember, we're looking at a 10-year weekly chart. So we're not looking at daily candles anymore. These are weekly candles. So for my technical analysis, what I did, I zoomed out and I'm looking at a larger time frame so we can find other historical price levels compared to where we are now. And this is what I'm seeing. So resistance, it's going to be that window, because you can see the candles riding that here for support and it's resistance here. So that price level around 366.89, that's something that it struggles with, or at least recently, as support and resistance. You can see it comes to that level, goes above it and tests it often. And then it's trading right now, it's trading below the 9-day simple. Well, this is a weekly chart. So this is a 9-week simple moving average, and this is a 200-week simple moving average. So let's just go back over to our daily chart. So now with us looking at the daily chart, this dashed green line is a 9-day simple moving average, and the dashed white line is a 200-day simple moving average. So this is what I'm seeing as support, and this is what I'm seeing as resistance as far as this price recovering. So let's talk about the stock quote for Domino so we can move on to finishing up the technicals about the volume. So let me put the floating data box back on. Appreciate you guys for tuning in. Hit that like button. I definitely would appreciate it. So Domino's opened at $341.47. They had a high of $344.01. They have a low of $328.74. And it closed today at $335.30, which was a trading range of $15.27. And as far as volume, they traded 4 million shares of their company today. 4 million shares. Now, what's interesting to me about that, they're the number one pizza company in the world, but I know the numbers depend on the market cap and a whole bunch of other stuff, the outstanding shares, but that seems like a low number. So we need to look and find what their average trading volume is before we can make a judgment like that. So let me cut off the floating data box, and then I need to cut back on my volume label. Sometimes it cuts off. I have no idea why. I need to fix that, figure it out. So here's the volume. So now we can see that this is actually very high for Domino's as a stock, because their average trading volume is less than 1 million shares. It's actually 700,000 is what they usually trade in a normal trading session. So they usually don't even trade 1 million shares in a day, and they did 4 million in a day. So this is almost 5 times what they usually get. And then on Friday, they did 1.3 million shares traded in that day. And then the price is $300 and something a share, you know. So now when we look at the volume rank percentile, this really tells us a story. So when we look at that, out of the most recent 252 trading days, no days out of the most recent 252 trading days had higher volume than today. So this selling pressure, they meant it. They meant it. They meant it. So when we look down here at the volume bar, this is the volume. So you can see the visual for today. This in particular bar right here is volume. Let me see if I can thicken it up. Yeah. So here's the volume for today. This bar, this gray shadowed bar. And you see this is a volume bar for the 22nd. This is the volume bar for today. So a whole bunch of those days could fit in just today's trading volume. Just to put that in perspective, when we have it down here, it's kind of hard to see. So to save the screen space, that's why I just use the labels. So I don't have to stretch it out like that for me to be able to see clear as day that that was a huge volume bar. I can just read the labels right there. So that's what that was about. So let me take me off the screen because I want to make sure I did this right. Because if I didn't, then when we take this off, it's going to block my volume labels. Let me pull this up. All right, so we done with Domino's. Let's go over to our biggest winner, because we already been up here for an hour, guys. I appreciate you for tuning in and sticking with me. So let's get with it. Let's get it going. So we taking Domino's off. They were the loser. Did I do that yet? No. There it is. Took them off. Put me back on the screen. And we need to go over to our watch list. So we go over to the watch list. We go over the quotes. That's where we are. Now we hit percentage change. So the biggest winner for today is SanDisk, ticker SNDK, SanDisk Corporation. So they gained 8.11% today. Their previous close was $989.90. And today they closed at $1,070.80. So if someone had invested $1,000 at the previous close, I'm gonna do this off the top of my head, they would have gained $81.10. And let's try to make sure I ain't crazy. Just go ahead and put the $1,000 in, multiply 0.0811 equal, $81.10. And then we add the investment capital back to it. So they invested $1,000. That was the principal. The ROI was the $81.10. So now the total, the principal and the ROI is $1,081.10. Now let's go over to analyze. We're gonna start speeding up a little bit. Go over to analyze. Here's the ticker symbol. They are in the information technology sector. And the company profile, take me off the screen. This wasn't working, so I just click this. Take me off the screen. So the SanDisk Corporation's company name. The website is right here, but the links for the website are also down in the description for your convenience. I'll read a little bit of the description. SanDisk Incorporated develops, manufactures, and sells data storage devices and solutions using NAND flash technology in the United States, Europe, the Middle East, Africa, Asia, and internationally. Now, let's go to their website. Take this ticker off. Website. There we go. So here's SanDisk website. I'm able to move a lot faster because it's moving smoother. Now, they sell SSDs. They sell Flashcards, it's about storage. Storage, that's their services. I had it on my phone, but yeah, we'll see it. Memory cards right up here at the top. So here's their goods. Find out what they sell, things like that. Memory devices, things that you can install in your computers, the SSD, flashcards. These are USB-Cs. See, Type-C, USB Type-C, future-ready PCIe Gen speed. Yeah, got to store your information and your data. This is what they do. All right, so we're down at the bottom of the screen. I'm looking for the About Us, and I'm blocking it. So let me take me off the screen real quick. So About Us, investors, and careers. It's very convenient. It's right here, guys. So the way they have their set up is very easy. So boom, we're at the About Us. Put me back on the screen. That didn't work. I can't wait to figure out what this is. All right. We already zoomed in. About Us. So here it is. At SanDisk, we keep people and businesses moving forward with inspired innovations to actualize their potential. So this is some more who we are. So this is the who we are, about us, our principles, innovation, propel progress. Remember, the links for this website are down in the description for your convenience. I want to browse over this so we can get to the technicals and the Thinkorswim charts for the company. So here's the leadership and the executives. Okay. So now we can go ahead and move over to, I'm blocking it. So I'll take me off the screen again so you can see it. Go right here to careers. All right. So I'm looking for the benefits right here at the top. So I said we're going to speed up a little bit. Just click benefits, waiting on it to load up. Here we go. Okay. They made it real easy to find, didn't they? That's what I'm talking about. That's what I'm talking about. So here's the healthcare, lifestyle, and well-being. This stuff is starting to be standard, it seems like. I don't see the, I'm looking for the, like, I don't see the adoption thing we had talked about. But most of this stuff, I didn't see children's behavioral health support before. I'm sure I've seen it before, but like not common. That's something unique to them. The employee disability expat. Okay. Employee stock repurchase. That's good. So they got some great benefits for the customers for the employees from what I'm seeing. So that's good. Now we're going to go over to the investors, which was down at the bottom, just scrolling at the top to see if it was something I missed. We went straight to benefits because I said I wanted to speed up and go ahead and go to the charts. So we're going to go to investors. You can't see it, so I'll take me off the screen. Right here, investors, click that. Now we're there. It opened up on a different, over here in a different window. I'm about to bring it over. That's why you couldn't see it. It was one of those. It was one of those. So blow this up, put this back. Go here, blow that up, go here. All right. Now we zoomed in. Now we too far. All right, we're looking for the stock quote and the charts if they offer them on their website. So I'm scrolling down to see if we can find it. Here it is. So stock information. We're going to click that, but I'm going to scroll down a little bit. Oh, we are at the bottom. So go ahead and click that. Put me back on the screen. Here's the stock quote. Here's the chart that they offer on the website. And they do offer other tools. So they're right here. The links for the website are down in the description for your convenience. So let's go over to the Thinkorswim platform. There we go. Put the disclaimer back on the screen. And now we're going to go over to the charts. Now we've pulled up SanDisk a few times. And if you've been following along tonight, if that's still you, then you would know if these are all-time highs, then we don't have any technicals for us to use, which we don't. So this is a 10-year weekly chart. And if you've been following along and you're starting to be able to read these, then you can see this is definitely not 10 years. It actually only goes back to 2025. You don't see the 2024 bar. So there's got to be some type of story behind this. So since you're here, let's just go ahead and find out what the story is. Like, when did they go public? Like, why is it only going back to 2025? Why is SNDK only back on the chart to the year 2025? So I can get this information for you. I'm waiting on it to load. It's pulling up the answer. So while it's doing that, I'm gonna leave that over here and we'll come back to it. But based off what's available on this chart, there's no price historically that's higher than what it is now. So there isn't something we could use as resistance. So in this area, this is where I was using it as support, because I had a few price points that came to that area. And these are weekly candles. Keep that in mind. These are weekly candles. So I was able to identify that area because it was there a lot using different weeks. With this week, there's only these two candles. So I could possibly use that as support because you got two candles that touch that area. They overlapped at that area. These two candles, you could do that here as well, but it's not a definitive bottom. This is more like a definitive top. This is more like a definitive bottom. This went further down and that went further up. So if that was the case, then this would be more of a zone. I hope this is starting to make sense to you. This would be their overlap. So that would be like a zone of support and resistance. That's how I'm seeing it as I'm reading my technicals. But because this is only 2 weeks, I wouldn't do that. I would use this line, especially with it being up as high as it is. And then you have another one here. So this is actually a gap. Like if we zoomed in, let's put a price level here and we put one here. See, there's no trading price in between those two areas. That's actually a gap. So if I zoom, you can see that it's a space. So it was like a roughly rounding it off. It was a $6 gap between those 2 weeks. So from Friday to Monday, because this week candle right here is just Monday. This candle right here, even though it's a candle that represents a full week, it only has a Monday in it because this week just started. So that's what I'm seeing if we were to look at the technicals using the 10-year weekly chart. And I asked the question. So when I looked over here, it says, so here's the answer about why we don't have more than 2025 for when it comes to SanDisk. This is not the right thing. I done pulled the wrong thing. Here it is. It says the chart for SanDisk only goes back to 2025 because SanDisk began trading as a newly independent public company on February 24th, 2025. Western Digital, ticker WDC, acquired SanDisk in 2016 and recently spun off its flash memory business back into a standalone company. So that's why we don't have more than these 2 years of historical data to be able to perform the technical analysis like we did on the other companies we looked at tonight. So that's why we have limited information for that. And setting something up over here on the other monitor. We good. We don't need that. Let's move on. So let's go over to the daily chart. So we're looking at a 1 year daily chart. We already talked about the technical analysis and not being able to use any historical data. And this is definitely making all-time highs. This is in the way I can't see. There we go. So it's definitely making all-time highs, SanDisk. So now they trading at over $1,000 a share. And they just been running, guys. They've just been running. So remember that tool we used earlier? Like this tool right here? The trend line. So let's start at the beginning of 2025. So the first day for that would have been this one. Right here, this candle. Yep. So January 2nd. So I'm gonna zoom out. We're gonna focus on this area right here. And we're gonna use that regression, that trend line tool. Click it to the bottom into this high. And now it's on the bottom. Let's edit the properties and put it in the middle. In the middle. Now when we mouse over it, it's right there. So it took 114 days. So if someone had invested in SanDisk at the beginning of this year, on January 2nd, this stock then went up 338%. There was an opportunity in there for that type of return, and we not even halfway through the year. This is why it's so powerful reading these charts and seeing this stuff for yourself. These opportunities exist. January 2nd, this year, till we not even in May. So 4 months, 114 days, 338% return. So let's put this in perspective, put a calculator on the screen so you can see what I'm talking about. So if someone had invested, let's use a smaller amount because some people say that I can't afford that. Let's just say $200. So if someone had invested $200 and they got that 338.8% return, that would be times 3.388. That is what the decimal would have turned into, but I'm gonna make it even easier. Clear that out, put the $200 in, $200 times, and just put in 338.8, exactly how you see it. Now you hit the percentage and it'll move the decimal for you, just in case you can't remember how to do that. Then you push equal. So this would have been the return on the $200 investment. This is the ROI. So if you add the $200 investment back to what the person would have received as the investment growing, then that $200 would have grown to a total of $877.60 in less than 4 months. Less than 5, because we at the end of April going into May. So less than 5 months. And we use that tool to get the time frame. That's crazy. Okay. And we were looking at it when we drew the technicals over here. So we've looked at SanDisk, I don't know how many times this year, but it was down here when we looked at it. So it was trading for around $700 and something around that time. And I know somebody probably might be thinking, well, I couldn't afford to buy it at $700. Guess what? Charles Schwab offers what they call stock splices. I think they have a specific term that they use for it or whatever. But my point is, you can buy a fraction of a share. Someone can purchase a fraction of that. So if they wanted to buy just the $200 worth of the $700 price, then your percentage would be based off of the amount of money you invested. So that's not even an issue. As long as the company, as far as I know from the research that I did, if the company trades in the S&P 500, if it's one of the 503 companies listed, you can buy a fraction as low as $5 per share with Charles Schwab from the research that I did today. And I'm actually going to do a video on it to show exactly how you do it and how to put the orders in and all of that stuff. I researched it today. That's part of the reason why I'm kind of off and I'm tired tonight. But let me go ahead and give you the stock quote on SanDisk so we can move on. So put the floating data box back on and give you this information. So SanDisk opened at $1,019.65. They had a high of $1,070.66. They had a low of $1,008.88, and they closed today at $1,070.20, which was a trading range of $61.78. And their trading volume was 13 million shares of this stock was traded today. So when we look at the trading volume, let's take off the floating data box. That drives me crazy once we're done. The average trading volume for SanDisk is, take me off the screen so you can see it, about 10 million shares are traded in a trading session when it comes to SanDisk on average. They traded 13 million a day, and then on Friday, they traded 11 million. When we look at the volume rate percentile, put me back on the screen, the volume rate percentile was 67.5%, which means out of the most recent 252 trading days, 82 days had higher volume than today. This DA means days above. DB means days below. So 170 days had less volume than today. And it's above 50%. So it's 67.5. That's what we're looking at there. And they have earnings coming up in 2 days. Is it 2? Yeah. So on April 30th, they have earnings coming up. They sure do. Okay. And right here, my label up here tells you. So 3 trading days until next earnings. So I have a label that actually tells me that right there at the top. Whew. We got through it tonight. Thank you guys for tuning in. Let me change this camera. Let's see if it worked. Boy, this thing be putting me through the flux sometimes. I'm trying to tell you, told you. Go over here to captions. I got some announcements, so stick with me. I'm just trying to put what I need to put on the screen while we do that. Oh, it's already up. That's what we needed to be. We just don't need this on Domino. So let me switch this to this. So I do have an official page over on Facebook. And I'm attempting to pull this up on the screen now, and it is not working. So let me find it. Oh, I know why it's not working. Here we go. Here we go. There we go. All right. So I have an official page on Facebook. If you can be so kind, go over there and follow that page. I need to get 100 followers so I can unlock live streaming features on that page, so I can start live streaming what we're doing right now. I could take it off my personal Facebook page and I could put it on my official business page. That would help me out tremendously. I put the rest of everything I wanted to announce tonight on the prompter, so let's get to it. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys for joining me tonight. If you want to learn more about how I first got started trading and investing, quitting my day job and becoming a full-time trader and investor and building a brand and creating content, check out my exclusive interview titled People, Money, and Investing. Losses Lead to Wins. And I was interviewed by content creator Tiara Owens. She's fantastic. She's on Facebook as well. Look for Tiara Owens. And make sure you tune in weekdays following a market trading session at 11 p.m. Eastern Time. Take care and God bless. There we go.